Hello, Promoted Markets. This is Ahura, and we'll be with you to review the US labor market data and markets reactions. As always, first let's check the data and see what we had as a data in the market, and then we can check the reactions as well. So far, we have 77,000 newly created job in April, which means more than 138,000. But the important point is that the previous week's more than 200,000 jobs is revised lower to 185,000, which means that the labor market, the final data shows that the labor market is cooling. At the same time, we know that the manufacturing payrolls fell by 1,000. So it means that they are not just creating jobs, they are losing the jobs as well. With this condition going on, the government payrolls increase only 10,000. We know that with the new administration, White House, they are not so into hire the employees. So the government payrolls is expected to go lower, and it's 10K, much less than 15K that we had previous week. At the same time, average earnings increased by 0.2%. It's slightly lower than 0.3% expected, which means that annually 3.8% stays unchanged, and it's not going to increase to 3.9%. With this condition, we now with this condition, but with this newly jobs that we had, now we can say that unemployment, we can see that unemployment rate also is steady at 6.2%. Generally, the data shows that the market, labor market, while it's still strong, and still enough cover to go further and confirm itself as one of the most strongest labor market in the world. But still, there is some more signs of cooling, especially if you go further. If you review the previous day's data, yesterday we had job challengers, we had a challengers job cuts, which increased only 62.7%, much less than 204,000 previously in March. And in April, we had only 105,000 job cuts, which means less companies, they are going to fire their employees. So less fires, while the hiring also is slowing. But that's why we can see that continuing jobless claims also increased to 1,916,000 from previous week's 1,833,000, which means that now it's a little bit hard. While the companies, they are not they are not firing, or better say they are firing less. They're still, so somehow they have doubts about the hirings as well. So it means that there are more people, they are staying more than 1 week unemployed. So finding the job is getting slightly harder. Initial jobless claims also increased to 241,000 from 223,000 that it was actually revised higher to 223,000, much more than the expectations as well, which means that still again the labor market has more sign of cooling. Add this the trade tensions that they're increasing the pressure on the labor markets, while the manufacturing data also shows that the manufacturing data is still going down. The GDP also fell by 0.3% in the first quarter. So generally, the economic condition is not that much fine. While at the same time, we know that manufacturing activities and generally the economic activities, labor market also is getting slightly slider or weaker. These data and these numbers shows that Federal Reserve's possible 2 rate cuts probably can change to possible 3 rate cuts in 2025. So if we had a more chance right now for 3 rate cuts in the market, which means it's not a positive for the US dollar. The dollar index, which was expected to continue its correction towards 101 mark right now, it sounds like a little bit hard to go more than 105 marks anyway. The market's not something we can predict it 100%. But right now we can say that with these data, we can expect the US dollar index to stay more softer towards 100 marks right now, not too much chance to increasing. While on the other hand, there is less chance also for falling further right now, at least in the short term, midterm. This somehow weakness in the stock market, in crypto, in the forex market, in the US dollar market, and generally higher risks in the market, it can increase the demand for gold. Even thought in an initial reaction, it was not positive, it was negative, especially after the US dollar slightly increased. But generally, these numbers and these data shows that the economy is weakening. And while the economy is weakening, the people, they are not going to be so much positive about the stock markets, which means that the gold still will be in demand. So the current slight downtrend or losing the prices, still the gold is a positive, and we are expecting to see the gold next week to above 300, 3,250 in between 3,250 and 3,300 for the next week. And generally, we are positive, but the natural with the positive tendency by the gold, while in the oil and energy market, these data cannot support the energy market, as that what published so far means that the economy is getting weaker, and when you have a weaker economy, so you cannot count too much on the energy demand. So which means it's not a positive for energy and oil market. And these numbers, while the stock market is getting slightly encouraged after 3 possible rate cuts, the chance of more rate cuts, which means more dovish policies, which is the positive actually news for the stock markets. S&P 500, Nasdaq, and Dow Jones, they increased slightly right after the news or right after these data, but we should not forget that these upward trend, the main reason is the negative news that we had. So especially this encouraged by the news that came from the China, that the Chinese official told that Americans from some channels, they had some sign, they gave some sign and chance for to have a trade talks and somehow to solve these current conditions, that these current tensions. But still, the markets got a little bit encouraged with this data and also with the news from the China. But generally, the market is getting encouraged because of 3 possible rate cut. And 3 possible rate cut is coming because that we have a weaker data from labor market and economic growth, which means not a positive for generally for the stock markets. That's why the uptrend of the stock, this upward of S&P 500 seems like be limited around the current levels, and most probably we're going to see downtrend to start soon and continue slightly downtrend in the stock market, especially in the big indices. Going further in the cryptocurrency market, these news, they are not that was not such a good or bad news for the stock market, for the cryptocurrency market. So but generally with the current condition that we have in the stock markets, pressures that we have in the stock markets, the money goes out of the can go out of the stock market, and they are looking for some more secure places such as the Bitcoin and gold, US dollar, sometimes the US, slightly US dollar, but because of weaker economy growing, the United States, the US dollar will get less demand. But Swiss franc and Japanese yen also going to be one of the most beneficiaries of these data. So that was what's happening in the market as a data, and that's the market reactions in different charts. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.